Imagine getting free access to the Newsday, the Standard, the Zimbabwe Independent, and the Weekly Digest for a full month. Well, you can. And all you need to do is download the Newsday e-reader app on Google Play Store or scan the Newsday QR code in any of the AMH print publications and start enjoying the quality content. Usasaririrewe, famba ne time, famba ne chokwadi, famba ne e-paper.
Ladies and gentlemen, my name is Rudo Nyamoto, your Director of Ceremonies for tonight. Introduced in 1998, the Quoted Companies Survey continues to grow both in age and reach, not forgetting the indelible partnership with Nedbank since 2008. And this has contributed to the growth of the survey, making it the most recognized event in the Zimbabwe corporate space. Our guest speaker, Dr. Daniel Monahan, Nedbank Managing Director, Dr. Spongile Moyo, Nedbank Zimbabwe Board and Management, Zimbabwe Stock Exchange CEO, Mr. Justin Boni, our parent ministry, Ministry of Information, Publicity and Broadcasting Services, industry captains, Alpha Media Holdings Chief Executive Officer, Mr. Kenyas Mafukidze, Alpha Media Holdings Board and Management. It is my singular honor to, on behalf of the organizing committee, welcome you to this grandiose event. H. Jackson Brown said, the best preparation for tomorrow is doing your best today. Tonight, we celebrate companies that have done their best, those companies that continue to do their best today. Join us as we celebrate. He is one of Zimbabwe's fine financial minds, a development economist and entrepreneur. He's a chartered accountant with 30 years experience and also mergers acquisition specialist. In addition to being a CA, he also holds a Master's MBA with Manchester University, a Master's in Philosophy degree in Development Finance with Stellenbosch University. He has served and sits on a number of boards within the country. He is the founder of the CEO Roundtable and past president of the Zimbabwe Economics Society. Ladies and gentlemen, Alpha Media Holdings Group CEO, Kenyas Mafukidze.
Thank you, Rudo, for a wonderful introduction. To our keynote speaker, Dr. Daniel Monahin, the CEO for Resolute Consulting, who is also the adjunct professor at faculty, Queen's University in Canada. Our guest speaker, Mr. Tapelo Tswelo, the CEO of Botswana Stock Exchange, who is also the chairman of the Committee of SADC Stock Exchanges. Our partners, the Zimbabwe Stock Exchange, represented by the CEO, Justin Boni, and of course our official sponsor, Nedbank, represented by the Managing Director, Dr. Sibongile Moyo, the Nedbank Zimbabwe Board and Management, who we remain indebted and are very thankful to. Last but not least, the parent Ministry of Information and Publicity. We thank you for your continued support. And also to the Alpha Media Holdings Board and Management. Good evening to you all. It's wonderful to be here tonight for 2022 Zimbabwe Independent Quoted Companies Survey, proudly sponsored by Nedbank. What a great evening this is. This is an annual festival to recognize and celebrate listed companies trading on the Zimbabwe Exchange that have made a significant contribution to our investment universe. The survey, as you have become to know it, assists in assisting policymakers, potential investors, in carefully analyzing the macro and micro dynamics, not only in the sector, but indeed in the country. The survey contributes to investors making calculated and informed investment decisions in line with what is prevailing at the moment. To quote an investment guru, Warren Buffett, who said, "Never invest in a business you don't understand." So the survey is meant to assist us to understand the market, understand the dynamics, and indeed make wonderful investment decisions. This year, the theme for Zimbabwe Independent Quoted Company Survey is Navigating Global Dynamics. This theme is an invitation for Zimbabwean businesses to gear themselves to competing in an increasingly global market space. Thankfully, technology enables this ambition to be achieved, and we urge all companies to take advantage. Ladies and gentlemen, tonight we are going to honor listed companies that have excelled in navigating the business environment and performed well. Allow me in advance to congratulate all the winners and the CEOs who have done exceptionally well in this environment. Once again, a huge thank you to the official sponsor, Nedbank, without whom this would not have been possible. And allow me to thank you again for joining us tonight on this wonderful evening. Thank you, and God bless you all.
Benjamin Franklin says, an investment in knowledge pays the best interest. Opportunity is missed by most people because it is dressed in overalls and looks like work. These are words by Thomas Edison. Tonight we celebrate men and women who have put in the best work and their best foot forward. Ladies and gentlemen, let's welcome our sponsors who help us see money differently. They will give us a few words.
Greetings to all our viewers. On behalf of Nedbank, it is an honor and privilege to sponsor the Quoted Company Survey for the 6th consecutive year. Our partnership with the AMH has grown over the years. We are proud of the milestones achieved with this prestigious event, which brings together listed organizations that have excelled in their operations. Today we celebrate success and we take pride in achievements which will ultimately benefit our great nation. Nedbank Zimbabwe is a subsidiary of Nedbank Group headquartered in South Africa. Through our parentage, we have access to a wealth of global expertise in financial solutions. Our offering to the market is tailor-made to the requirements of our unique Zimbabwean environment. We pride ourselves in our unique offering to the quoted companies through our corporate and institutional banking unit. The solutions on offer cater for the large corporates, the mid-tier business banking clients, agribusiness, franchising, structured trade finance deals. Over the years, we have established strong bonds with regional and international banks. We stand as local banking agents for the offshore funding solutions in these structures. Our retail banking package includes robust SME banking solutions which answers to the needs of the small businesses. We have a strong belief in value chain partnerships, and we have no doubt that the support rendered to the SME fraternity will ultimately filter to the large corporates. SMEs are inherently suppliers to our stakeholders for this prestigious event. Our branches are located in strategic cities and towns across the country, and that provides the physical touch points to business operations and is buttressed by the seamless global online digital solutions. Our treasury and international banking divisions offer safe and secure trading for multi-currency investments and global market solutions. We stand out consistent in our global solutions. This is particularly against a background where correspondent banking relationships have come under a lot of scrutiny over the years. The world of banking has evolved. Digital solutions have taken the center stage, both at the corporate and personal level. Our solutions, including partnerships and integrated solutions, have provided the much-needed convenience to our clients. The bank is committed to ongoing research and development on the digital space, tapping on our group resources and delivering cutting-edge innovations. This year's theme, Navigating Global Dynamics, is befitting as the world has opened after the COVID-19 induced restrictions. Zimbabwean quoted companies are challenged to interact, to integrate, and create synergies on the global platform. The globe is an extension of our boundaries, and it comes with opportunities. We have to challenge for our space on the global platform. Nedbank is committed to offer financial advice and support to the quoted companies and their value chain partners. This commitment is evidenced through our ongoing funding support under the US $75 million Nedbank pre- and post-shipment facility for trade finance opportunities. We also partners to the US $15 million RBZ Afreximbank Letters of Credit Strategic Import Structure. Above that, we've also partnered with various market players as an agent bank for offshore lines of credit extended to Zimbabwean companies by the various offshore funders. On the local trade, we are also providing multi-currency financial support to the market that is guided by the unique project requirements. Our teams of experts will be at your service at all our service centers, including our corporate and institutional banking offices in Harare and Bulawayo, a Greek division in Harare, branches dotted across the country, stretching from Victoria Falls, Rishavane, Mutare, Bulawayo. We also have seamless 24-hour point of contact through our contact center and the social media platforms. We wish to congratulate the winners this evening and salute you for the sterling work in the obtaining environment. The partners who could not get their hands on the awards this evening, we appreciate the challenge that you brought to the table and the stretch that you induced to our winners' capabilities. We thank you.
See money differently. Thank you so much, Nedbank. And now we need some entertainment, and we have the right person. Felinandi is here to take us on. Get your dancing shoes ready. We're going to be entertained.
My name is Felinandi. Welcome to Zimbabwe Quoted Companies Survey.
Director of Ceremony, Board of Directors, Management and Staff of Alpha Media Holdings, Board of Directors, Management and Staff of Nedbank, CEOs, fellow directors, management and staff of listed companies, industry players, members of the media, distinguished guests, ladies and gentlemen. On behalf of the Zimbabwe Stock Exchange, it gives me great pleasure to be celebrating the 2022 Zimbabwe Quoted Company Survey, running under the theme Navigating the Global Dynamics. It gives us great pride to be celebrating the performance of the ZSC listed companies. The BOSS is a barometer of the economy, and for the period September 2021 and September 2022, we have witnessed significant growth. Allow me to share with you the key ZSC performance highlights to date. The All Share Index, which is the benchmark index for all the listed equities, achieved a gain of 40%. The market capitalization has witnessed a gain of 43%. Turnover increased by 190% compared year-to-date 2021 and year-to-date 2022. There was a 480% increase in foreign trades on the buying side and a 124% increase on the selling side. Today's global turbulence provides an important reminder that capital markets and the assets that underlie them offer extraordinary investment opportunities for companies. For a company or entity in need of funding, the capital markets provides an alternative source of funding and long-term capital raising solutions. With the diverse securities accessible on the exchange that include debt, equity, REITs, depository receipts, companies are able to raise capital for expansion and retooling using the different securities. The globalization of markets offer additional opportunities for companies to reach a wider audience similar to the capital markets. With the remarkable worldwide expansion, now is the most opportune time for companies to adapt and adopt strategies that can lend them opportunities in the global markets. Navigating the global dynamics requires a shift in the mindset, as continuing with existing operating models may not suffice for the businesses. It is crucial for businesses to change, as the flexibility and adaptability becomes valuable in navigating the global dynamics of the country's capital markets. The ZSC offers listed entities attractive investment opportunities with better returns even in this volatile environment. Potential issuers can use different securities to raise capital, that is debt, equity, depository receipts, ETF, and REIT units. We are happy to have witnessed the following listings since 2021 to date. The listing of the Old Mutual ZSC Top 10 Exchange Trade Fund in 2021, the relisting of Tanganda Tea Company, listing of Morgan & Company Multi-Sector ETF, listing of DATVEST Modified Consumer Staples ETF, listing of Morgan & Company Made in Zimbabwe ETF, listing of Cas-Cedo Agricultural ETF. As the ZSC, we also believe that REITs is where our growth will most likely come from, considering that property is of utmost importance to most Zimbabweans. We are optimistic that we will witness the listing of some of the properties of pension funds on the ZSC. The ZSC celebrates all the winners and takes pride in their achievements. A hearty congratulations to all the award nominees and winners, and we celebrate the outstanding performance of the ZSC listed companies. Congratulations to the Zimbabwe Independent and Nedbank for hosting another successful edition of the Zimbabwe Quoted Companies Survey.
Mr. Tsiole is a seasoned financial markets expert with over 20 years' experience, having worked for the Central Bank of Botswana and Botswana Stock Exchange. He holds a Bachelor of Social Sciences from the University of Botswana and a Master of Commerce in Financial Markets from Rhodes University. Further, he holds a Master's degree in Business Administration from the Graduate School of Business, University of Cape Town. He has extensive financial markets experience in capital markets, forex, structural products, and financial market regulation. He was appointed CEO of BSE in January 2016. In recognition of his exceptional and devoted service to Botswana, in 2018, he was awarded Presidential Order of Meritorious Services by His Excellency the President of the Republic of Botswana. He is also the chairman of the Committee of SADC Stock Exchange and the deputy president of African Security Exchanges Association. Mr. Tsiole will give us an overview of the SADC Stock Exchange.
In addressing the issue of what SADC stock exchanges can actually do to navigate the global dynamics, I think there are several issues that we can look into play here. Number one, I think there need to be more collaboration between SADC stock exchanges, as it is the case now, because most of them are members of the COSE, which is a committee of SADC stock exchanges. And then if SADC stock exchanges can actually leverage on this, because from experience, we have realized that when you come together as a group of SADC stock exchanges, and you're talking about 14 stock exchanges in 16 countries in SADC, we're able to leverage on our numbers to really push forward our growth as stock exchanges. Quite recently, we managed to get funding from FSD to do a green bond program for the SADC region. I think it's one typical example that when we come together and collaborate, we're able to learn from each other, and then we are also able to help each other. But the other thing which is very crucial for the SADC stock exchanges is that they need to really make their presence felt, especially in the international market. A lot is not really known about our countries and our stock exchanges, while in actual fact, a lot of stock exchanges generally perform quite well. You look at the indices this year, some stock exchanges have actually had some positive indices in terms of the growth of the share prices in their respective market. But of course, a few also experience some decline in terms of the share prices in the market. But generally, I think you look at the number of listings, listings are slow to come, but they are coming forth. And also the indices, I think they are in the positive territory, while globally, majority of the indices are also in the negative territory. And I think playing in the international space by dissemination of information, by also collaborating as a region, is very important, because it will lead us to attract a number of investors into our market, or in any particular market, who will ultimately look at other opportunities in the neighboring countries and also invest there. So I think it's a very fundamental thing, because there's a lot of capital out there that we can actually tap into our market. The other most important thing is to be innovative as stock exchanges. I think right now there's a big buzz around ESG, about impact investing, and about green economy and green finance. And this is where stock exchanges across the SADC region should actually strategically position themselves to innovate products in this space, because I think the world is moving fast into this direction, and therefore we should not be left behind. For the Zimbabwe Stock Exchange, in terms of drawing for lessons from Botswana and other stock exchanges, I think it's to increase the publicity around the existence, especially in the international space, and also to tap into the dynamics of the local economy. You realize that a lot of Zimbabwe is quite a big economy, and there are a lot of opportunities in Zimbabwe, because it's also strategically located to serve some of the countries in the Central Africa, the likes of DRC and the likes of Congo, your Central African Republic. And therefore, as a big economy with a potentially big manufacturing industry, I think the Zimbabwe Stock Exchange generally should strategically position itself in such a condition that it can be able to support its companies to use Zimbabwe Stock Exchange as a platform to raise capital, to expand regionally. And also, I think some of the things that have worked for us is association with other stock exchanges. We have signed, of course, a memorandum of understanding with Zimbabwe Stock Exchange to facilitate cross-listing, because if some of these companies cross-list in Botswana and in Zimbabwe, when there is no capital in Zimbabwe, they can come to Botswana to raise capital and deploy it in Zimbabwe. One of the things that I think have been noted is that the Zimbabwe Stock Exchange is struggling to attract foreign investors last year, and then they ended up launching the Victoria Falls Stock Exchange. I think it was a good move, but I think there have to be some efforts to sell the narrative. As Botswana Stock Exchange, we took a US tour mid this year in July. We went to see some asset managers and some companies in the US who can potentially invest in Africa. The likes of big asset managers who can potentially look into that market. But of course, I understand sometimes Zimbabwe is much premium limited by options because of the sanctions that have been placed in them. But there are a lot of other foreign investors in the Far East, in the Middle East, and also in the eastern part of the world, who we have seen of late have come to invest in Botswana, mainly because we have pursued what we call an internationalization strategy as the BSE, because we have realized that we have done a lot locally, and therefore we need to start taking baby steps outside. And I think it's starting to bear fruit in that regard. And then I think the advice that I would give to listed firms in the SADC region is that, you know, they must take advantage of capital markets or stock markets in SADC, and then expand their services into the rest of Africa. And we have since experienced that as the Botswana Stock Exchange, because majority of the stock companies listed in the stock exchange in Botswana have basically used the BSE as a platform to raise capital, and then they expand into the rest of Africa using the BSE as a base. And I think this is where majority of the companies in the SADC region should be looking. They should be outward looking. Look to raise capital in our market, and then also look to expand into the rest of Africa to tap into the opportunities that are presented by the continent.
Indeed, that was such an in-depth overview looking into the SADC region. At this point in time, ladies and gentlemen, allow me to introduce our keynote speaker, Dr. Daniel Monahan. He is CEO of Resolute Consulting. He heads the organization, which is a global leadership development firm based in Toronto, Canada. He is an adjunct professor in the executive education arm of Smith School Business at Queen's University, Canada. He also holds a similar adjunct professorship roles in top business schools in Africa and Asia. He designs and speaks on the multifaceted topic of leadership. As a global executive, he championed hands-on transformational leadership in Fortune 500 and S&P 100 companies. He established and managed new businesses across over 200 countries and territories. He is a fellow of the Chartered Professional Accountants of Canada, a U.S. Certified Public Accountant, and a fellow of the Institute of Chartered Accountants of Nigeria. He also is a published author of The Pragmatic Optimist, 6 Proven Strategies for Leading During a Crisis. And this hit #1 on Amazon's Canada's hot new releases within hours of its launch. Daniel is a member of the board of directors of American Express Bank of Canada, and chair of the board's Conduct Review Committee. Ladies and gentlemen, let us welcome our keynote speaker.
Thank you very much, Rido. The CEO, Botswana Stock Exchange, and chairperson of the Committee of SADC Stock Exchanges, Mr. Tapelo Tiole, Nedbank Zimbabwe Managing Director, Dr. Sbongile Moyo, Nedbank Zimbabwe Board and Management, Zimbabwe Stock Exchange Chief Executive Officer, Mr. Justin Boni, government officials and industry captains, Alpha Media Holdings Chief Executive Officer, Mr. Kenias Mafukidze, Alpha Media Holdings Board and Management. Ladies and gentlemen, a very good evening to you all. And congratulations to the best performing listed companies that were recognized in the various categories. Also hats off to the corporate leader of the Year award recipient. Under the theme of this discussion on navigating global dynamics, I'd like to speak to you briefly about growing from the inside out. That's the title of my message today, growing from the inside out. And that's because navigating global dynamics requires alignment with your internal dynamics. Your rate of growth on the inside will determine your rate of growth on the outside. Here's what I mean. Here's an illustration with this story. In the late 1980s, Michael Scott, the first CEO of Apple, sent out a screaming email with the subject in capital letters, bold capital letters, quote, "Effective immediately. No more typewriters are to be purchased, leased, etc., etc." End of quote. Why the sense of urgency? Why so much passion? Why the certain and the push for change? The memo had 6 short paragraphs. We're going to just talk about 3 of them. The first paragraph said, Apple is an innovative company. And the last 2 paragraphs said, we believe the typewriter is obsolete. Let's prove it before we try and convince our customers. Let's prove it inside before we try and convince our customers. Let's prove it inside before we try to convince our customers. Apple was struggling to sell a few thousand of those units, and they struggled to convince customers because their internal alignment was out of tune with their external positioning. They struggled because who they were was not what they were representing. They had to remake themselves into an innovative company on the inside. And as they say, the rest is history. Last year alone, iPhone, only 1 unit of iPhone there, product iPhone, sold 240 million units. Amazing. They've come a long way. And 3 lessons that we can pull from that Apple story. The first is that you cannot be remarkable if you do not remake yourself. The second is to change the global landscape, you have to change your inner landscape. And thirdly, your rate of change on the inside determines your rate of impact on the outside. Now, let's consider another perspective. In jurisprudence, there is the letter of the law and there's the spirit of the law. Ordinarily, lawyers don't talk about their differences because they move in alignment. But when they are contrary to one another, that's when it becomes a point of discussion. And so the letter of the law is the text of the law, and the spirit of the law is the intent of the law. So what does this mean? When these are in conflict and not aligned, before the law, your risk of culpability is low if you violate the letter of the law, but you abide by the spirit of the law. Your risk of culpability is low. However, your risk of culpability goes through the roof if you violate the spirit of the law while you abide by the text of the law. Why? Because the spirit of the law supersedes the text of the law, the letter of the law. And whenever there's a conflict, the spirit of the law overrides the letter of the law. Bringing that into business context, what I call the letter of the organization and the spirit of the organization is like text and intent in law. But here we're saying the letter of the organization is what you do, and the spirit of the organization is who you are. The letter of the organization is what you do, or what you tell people that you do, or what you're engaging the community with, and the spirit of the organization is who you really are. For Apple, what Michael Scott found concerning was that the letter of their organization was to sell the future, but the spirit of the organization was stuck in the past. Look at that conflict. Selling the future is what they say they're going to do, but being stuck in the past was who they really were. So Michael Scott had to understand and quickly moved that who you are overrides what you do. And what you do, if it's in contrast with who you are, it weighs down the result. And as a leader, he did two things very quickly. He called out the discrepancy, and he began a process to align who you are with what you do. So he began that process because who you are supersedes what you do. Remember, the 5th and the 6th paragraph said, we believe that the typewriter is obsolete. Let's prove it inside. To successfully navigate global dynamics, what you do is has to align with who you are, because who you are will eventually override what you do. In my past 31 years now in corporate, leading several organizations globally, in my 22 years of speaking and instructing on leadership, from the boardrooms to the classrooms, in my 8 years of academic research, last 8 years of academic research, and I've found that there are a lot of conflicts in organizations between what they do and who they are. I've seen this live. I've worked in 5 industries, 5 different industries. I've consulted for over 25 different industries, and I see it all the time. So the question I have for you is, are you selling the future when you're stuck in the past? Or are you selling innovation when you are not an innovative company? Do you offer hope as a business model, but you run a hopeless organization in the eyes of your employees and your partners? Are you a professional services firm, but you struggle to uphold professional standards? Do you sell efficiency, but you are one of the most inefficient organizations to ever deal with? Are you dealing and selling education and education services, but you are not a learning organization? Are you into communication, but even the different groups in your organization do not communicate with one another? Do you extract natural resources, but you struggle to extract the immense value in the human resources in your organization? Do you optimize economic resources by taking deposits from the surplus part of the economy and lending it to the deficient part of the economy, but you are struggling to optimize your own operation? Are you in the healthcare space, yet your organization shows little care and your leadership team scores low on the empathy scale? I could go on. If your answer is yes to any of this, then your risk of failure goes through the roof, because the letter of your organization conflicts with the spirit of your organization. When that conflict is real and it rears its head, it deals a huge blow on the success of the organization. And that gap and that conflict blows out of proportion whenever you face a crisis. How do I know this? That's because I've spent the past 8 years researching on leadership, especially in the time of crisis. And here's what I discovered. Because of the current global dynamics, and another phrase for that is the 4th industrial revolution, is that it has changed the nature of crisis. It has changed the speed of crisis, it has changed the size of crisis, and it has changed the severity of crisis. The speed, the size, and the severity of crisis has multiplied because of the current global dynamics. That's what I spent my research on. And that's the theme for the new book that I published last week, 2 weeks ago now, called The Pragmatic Optimist, 6 Proven Strategies for Leading During a Crisis. What I found in my doctoral level research is that a crisis ravages the letter of your organization, but it reveals the spirit of your organization. A crisis will undermine what you do, but it determines and it reveals to everyone who you are. In the book, endorsed by over 35 leaders across the world from several industries, from about 25 to 26 industries, I detail how to develop the depth of the spirit of the organization so that you'll be better prepared and be able to survive turbulence, because the current global dynamics, it's turbulent and full of adversity. How do you grow when others are shrinking? That's the capability that it does for you. So as Michael Scott said, we believe the typewriter is obsolete. Let's prove it. So what will be your challenge to your team? We believe dash. You complete what that means. And then let's prove it inside. We believe dash. Let's prove it inside. To summarize, to conquer global dynamics, you have to conquer internal dynamics. To conquer what's on the outside, you need to conquer what's on the inside. Remember, you have very little control with what's outside. You are mostly in control of what's inside. The research that's behind my book shows that the best way to respond to what you cannot control is to bend your energies towards what you can control. Changing the inside is hard. That's why very few leaders attempt it. So, but the fact that it's hard, does that mean you shouldn't try? I'm challenging you to try. It is hard, but it is worth it. And I'm going to leave you with the words of the 1912 Nobel Prize recipient in medicine, Dr. Alexis Carrel, a surgeon. He said this, he said, to progress again, man must remake himself. And he cannot remake himself without suffering, for he is both the marble and the sculptor. And in order to uncover his true visage, he must shatter his own substance with heavy blows of its hammer. Grow from the inside out in order to excel in the global dynamics. Enjoy the rest of the evening. Thank you very much for your time.
Thank you so much to our keynote speaker, Dr. Monehin. Very deep words right there. And now we're taking a notch up as we get some entertainment from Feli Nandi. Sit back, relax, and have fun.
Kuzora kwetu unotanga kutsana usache ukishure inga mepo iye iwe nini tiri wamwe chingo mirene inga mepo iwe nini tiri wamwe chingo mirene
Wow, that was amazing, amazing vocals from Feli Nandi. I could just wish for half her energy and power. As we move on with our program, ladies and gentlemen, help me welcome Respect Gwenzi from Equity Access as he gives us his analyst's overview.
Good evening and welcome. My name is Respect Gwenzi. I'm excited to give you the 2022 Quoted Companies Survey based on the findings of financial performance for listed companies for the period ending December 2021, as well as an extension into 2022, that is for the half-year period. This survey comes at a critical juncture in terms of global geopolitics and also the global dynamics around economic management. Basically, the Russia-Ukraine war has changed the face of the world. Primarily, we are looking at tighter supply chain disruptions. We are also looking at increased prices for commodities, and all these factors has driven countries to drive their monetary policies into tighter positions. The US Fed recently increased its benchmark rates. The South African Reserve Bank also increased its benchmark rates, but all this is in a bid to fight inflation, as these disruptions have driven prices for goods and services up over the recent periods. Zimbabwe has not been spared. We are also experiencing a harsh macro environment characterized by hyperinflation. We are also seeing an erosion in terms of the value of our local currency, driven by a number of factors. Authorities are also in the loop, and they're trying all that they can to try to put back the currency on the right path. They've put in a raft of measures that they're hoping to reconfigure, to help reconfigure the currency back on the right track. In terms of the performance overview, 2021 was generally a good year for quoted companies, for listed companies, and the economy in general. We saw companies report better results coming compared to 2020 and 2019 periods. The 2021 period was generally characterized with increased demand, and this was because the fiscal policy and the monetary policies were a bit less tight compared to the period 2019 to 2020, where we saw austerity measures kick in. We also experienced a better year driven by forex receipts, which were driven by firm global commodity prices, as well as remittances coming from the diaspora. All these helped increase demand on the local market. Although COVID-19 extended late into 2021, we saw most listed companies report double-digit growth in terms of their volumes and their revenues. This was mainly because they were coming from a low base, given the 2021, the 2020 and the 2019 situations, which were characterized by tighter fiscal measures and also monetary policy measures. Into 2022, we are seeing a reverse in terms of performance. Companies are beginning to report contracting performances, and this is mainly because demand is being eroded by inflation. So we have seen inflation rise to high levels of above 250 as at August, and this has driven consumers into reduced spend. We've also seen the tightening of interest rates, and the higher interest rates that are on the market have also reduced general expenditure levels in the country. So what we have seen from listed companies' performances up to the half-year period, June 2022, is that demand has generally been lower compared to prior year levels. The external sector, however, remains strong. We have seen receipts come in at about 30% higher than the prior year as at half year, and this is mainly due to strong export performance and also increased remittances, which is a trend that we have seen since 2021. The external sector is also being impacted by demand dynamics around gold, which is one of our main export products. We have also seen PGMs, which is the platinum group metals, demand also firming, and this has driven record sales for local companies that are into the exporting of those specific minerals. But generally, we have seen a huge growth in terms of forex inflows for the country. But despite all these, the country continues to experience huge forex challenges. This has driven the local currency into a negative performance on a year-to-date basis. But this trend has been going on since 2019. We'll look now into different sectors different sectors for listed companies and seeing how each sector performed. For the financial sector, interest rates remained the biggest factor driving performance. From 2022, we saw the RBZ adjusting the interest rates, capping them at 200%. And what this has done is to drive demand for loans down, but it has also reduced economic activity, because lending naturally drives companies into spending more in terms of their capital expenditure as well as other related activities within companies. So consequently, banks' interest incomes is generally coming in at lower levels compared to non-funded income, which is mainly fee and commission income, FX income, and other related incomes. But we have also seen a huge spike in FX income. This is mainly due to the positions that banks have taken, mainly against the local currency, and their holdings in USD have spiked to levels that has driven their general FX income up. So we have continued to see a split between funded income and non-funded income, which favors the non-funded income line, driven by the dynamics in the economy. But however, we've also noted an increased uptake of USD loans. Most banks are giving information that their loan books are now being skewed towards foreign currency loans, And this is encouraging given the huge appetite that's in the market for such loans. In terms of general balance sheet positions, most banks have also preferred to lessen cash holdings, trying to hedge their positions by investing into different asset classes and also getting into property as a way of hedging their balance sheet positions. The real estate in Zimbabwe remain one of low yields. The yields remain below 10%, and this is mainly due to a dip in demand. But we have also seen some sectors, such as residential, which have been exciting over the past few years. We have seen demand for residential properties grow, and some real estate companies have capitalized on that by providing the supply for that demand. But generally, we have also seen a consolidation in terms of some of the listed real estate companies. Dawn Properties consolidated with African Sun. We also saw ZPI consolidating back into Zimre Holdings, and so we are now left with two real estate companies on the stock market, which is Mashonaland Holdings as well as First Mutual Properties. On the agricultural cluster, the 2021 season was characterized by drought, but we also saw a new listing into 2022, which is Tanganda Tea, which demerged from Mikos and is now a standalone listed entity on the stock market. Tanganda is investing heavily into expanding its capacity. It has invested into solar so as to go off grid and be able to provide the necessary power for its plants in the Chipinge area. We have also seen Ariston, a player in that in the same sector. Its fortunes have declined over the past year, driven by the drought situation, as well as partially foregoing some of its investments in the Claremont area in Nyanga. For the tech and telco, we expected that the COVID-19 implication of driving companies into innovation and utilization of digital platforms, we expected it to unlock significant value for companies such as Cassava as well as Econet. But these companies have been slow in terms of their growth. When you look at matrices of comparable players in the US and also South Africa, you would realize that there has been a slow pace of innovation. But we also realize that for a player like Econet, there's also been the implication of regulation which has deterred them from adjusting their rates according to the dynamics around currency. And this has driven their performance lower, such that they cannot achieve optimal pricing levels compared to, say, the region and the rest of the world. So this has kind of kept the growth that is coming from these specific players. For the mining sector, we have seen a strong performance, but this is mainly driven by firm international commodity prices. We would hasten to say gold has significantly gone up, driven by the artisanal miners, whose contribution has now gone beyond 60%. As for the primary producers, they have continued to also churn out volumes, but at a much slower pace compared to the other sector. But generally, what we have seen from the mining sector is increased investments. We have seen new players coming on board. We have seen new mines being reopened. A big and major player in that sector is Kuvimba, which has been on a spree to buy mines. We have also seen some action at Caledonia, where they recently are planning expansions within the Blanket mine, as well as acquisition of other mines within the same sector. We've also seen in the chrome space some number of dynamics and new players coming into that space. We've also seen action with regards to Invictus, which has been exploring some oil in the Mzarabani area. We've also seen a number of other dynamics in the battery-related commodities, where a number of investments have also happened within the Harare area as well as the Mashingo area. But generally, this sector has driven earnings, forex flows for the country. And for the ZSE listed companies, there remains Riozim, which is largely and predominantly into gold production. They've continued to report improving financials based on increased revenues driven by these global dynamics. Much of the listed companies who are into the who are in the same sector have also moved to the VFX. Bindura moved to the VFX last year, and they have been reporting improved earnings. As of late, their performance has been weighed by a number of organization-specific dynamics, but the sector in general has seen improved performance driven by firm prices on the international markets. As an overview of the ZSE and the market in general, we have seen that capital inflows into the country have generally remained low. Foreign direct investment, for example, has remained below 1 billion for at least over the past 5 years. And when you look at it on a comparative basis, looking at other countries such as Mozambique, Zambia, Malawi, etc., they have received higher FDI inflows compared to Zimbabwe. And this is because of a number of factors. We could name sanctions, we could also name a generally harsh macro environment which does not attract capital, and also the volatility in terms of the economy. And these have been factors that have affected inflows into the country in terms of FDI. But even foreign portfolio investments, which are largely the monies that we see on the stock market, they've also remained very low. As of 2022, the foreign contribution to total turnover on the ZSE is way below 10%. It's actually now sitting at 7%. Whereas when you look at that aggregate in 2014, foreigners used to contribute about 60% of total flows on the Zimbabwe Stock Exchange. So this shows you the lack of foreign capital coming into local companies and local institutions. And this has had an inhibiting factor in terms of the growth that the listed companies have realized or should have realized over the past few years. So the lack of capital has impacted growth. It has also impacted profitability because machinery remains derelict for most, and less competitive when compared to regional peers such as South Africa and Zambia, for example. So what this means is that local companies' competitiveness in the region becomes low, and therefore their growth as well also becomes low. Looking at the ZSE is in a negative position on a year-to-date basis when you look at returns. This has mainly been a function of a number of factors, including the volatility in the economy itself. I think from May, when government instituted some new measures to try to manage the currency, it also drove monies away from the stock market, and some of the measures as well rattled the market itself. And there has been a tightening of the monetary policy, which has driven funds away from the stock market. And also the basic volatility that's in the market in terms of inflation has also driven investors into trying to get to some more solid investments. So this has been the dynamics around the ZSE in general. There hasn't been any new IPO in a very long time, since at least the past 10 years. Most of what we have seen, the action that we have seen on the stock market, is a basic demerging, it's a basic spin-off, and also listing of entities that used to be part of listed companies in the past. So new IPOs have not been seen on the Zimbabwean market, but this has mainly been driven by the general economic situation, where you have significant currency volatility and a whole lot of other issues that are impacting flows into the country. For the 2022 survey, we maintained the similar categories as last year. So we have the main category, which is the financial performance best, where we look at the best performing companies based on their financials. We also have a category for the sustainability, which looks at the environmental, social, and governance issues. So we picked companies that were able to perform well in terms of these matrices. We also have an additional category, which is the innovation and technology, where we looked at companies that are bringing in new solutions and also investing more in terms of their capital, in terms of their capital expenditure. So these are broadly the categories that we looked at and we maintained from last year. We also have another category which we added last year, which is basically the corporate leader of the year. We looked at exceptional leaders within the corporate space, mainly looking at the chairman or the chairperson's role, and we picked. We continue to pick some of the exceptional players in that space. So this is basically the categories that we maintained this year. In closing, I would say 2022 is proving to be a very tough year. We have recently seen a raft of measures that were introduced by the central bank as well as government in trying to manage the currency dynamics. And this has also impacted local companies. We have seen the tightening of the monetary policy driving liquidity into low positions across the market. We have also seen companies increasing their exposure into investments such as gold coins. All these dynamics have a net impact in terms of driving growth. But generally, what we are seeing is a decline in demand, which is coming from inflation, which is both local inflation and then imported inflation emanating from global geopolitics. These have been biggest factors driving demand into this year. We're looking as well into the issue of interest rates. The recent hikes in interest rates have also impacted demand, and local companies continue to face challenges in that regard. So for the remainder of the year, we expect the market to continue to suffer, that is the ZSE in general. We also expect companies to report reduced growth for those that are going to report improved numbers from last year. But generally, we expect the year to close on a tight end, where basic performance is going to be slightly below that of last year, except for a few exceptional players. So we expect that trend to go on. As for the ZSE, we expect it to continue on a decline up until early 2023. Thank you.
Ladies and gentlemen, the time you have all been waiting for. The winners for the Zimbabwe quoted companies are Technology and Innovation category. The company's business was under threat due to COVID-19, but innovation has helped it not only to retain customers, but expand base through convenient deliveries. In Kenya, the company's earnings shot by double-digit last year owing to a growing delivery business base. In Zimbabwe, the delivery business swelled by 60% year-on-year, helping swell revenue. It is evident that this kind of innovation is in line with future trends in retail. Simbisa Brands Limited is the second runner-up. With its long-serving CEO stepping down, the company has churned out arguably the highest number on new products on the market since the CEO assumed office. As the CEO exits, the company continues to innovate by introducing new products and expand its capacity in the milk and beverages line. The first runner-up is Dairy Board Holdings. In the period under review, the company expanded its production capacity by adding new lines for its wine catalog, effectively localizing production of one of the most demanded wine brands in line with evolution of wine demand in Zimbabwe. These investments follow another major 2015 investment in a production plant for a ciders drink. These collective maneuvers have not only improved margins but also product availability while sparing foreign currency. The winner is African Distillers, a subsidiary of Delta Corporation Limited. And now we look at sustainability category. The adoption of renewable energy is one of the key tenets of sustainability and the broader Sustainable Development Goals by United Nations. It is even more paramount in light of the deficits in power generation across sub-Saharan region, particularly in our own backyard. Building our own capacities to match demand is not only paramount for profitability, but sustainability of operations. Recently listed Tanganda Tea Company Limited has invested in a 4.4 megawatt solar plant to power its estates in the Eastern Highlands and is this year's winner for the environmental cluster of sustainability. The company has one of the highest employment levels in Zimbabwe, running in several thousands. Its presence in the community is multifaceted and includes sustained downstream sector support through contract farming and in turn supporting a higher number of families across the country. Its acquisition of smaller companies has also allowed for scaling up and value unlocking for the companies it has acquired over the years. This year's winner of the social cluster is Inscore Africa Limited. Most companies are still to catch up on governance tenets as espoused by the ESG global standards. Most local companies disclose as much information about their operation, only enough to meet regulatory thresholds, but at the disadvantage of the shareholder and other stakeholders. Transparency and disclosure are key aspects of governance and promote sustainability. This year's winner is Bindura Nickel Corporation Limited for its levels of financial information disclosure. And now we look at Corporate Leader of the Year. After a massive turbulence that threatened grounding the suspended and under judicial management company, this particular organization has gradually re-emerged, living up to its billing as one of the most promising assets on the Zimbabwe Stock Exchange. From boardroom squabbles to emerging from judicial management to reporting firm profitability, the company has steered clear of its troubled past, and all this could not be possible without a capable leader. The youthful leader has led the reorganization of the company and organically led re-emergence. CFI Holdings Limited chairperson Itai Valerie Pasi is this year's winner. Now we want to look at the overall winner, Best Performing Company category. The infrastructure agenda being rolled out by the government has springboarded fortunes for this particular listed company. The company has largely maintained a stable growth performance over the years, anchored on a diversified book and strong balance sheet, enabling it to fulfill its firming order book across varied sectors. In the year under review, the company's profitability significantly improved, anchored on a strong order book. It is exactly 10 years since a major shift at the company, which saw a change in shareholders, management, and company name. But to date, the company has shown not only ability to survive, but grow through value unlocking and expansion. Masimba Holdings Limited is the second runner-up. The first runner-up has shown great resilience and innovation in a turbulent time, characterized by COVID-19 and global geopolitical tensions, particularly the Russia-Ukraine war and attendant challenges of supply chain disruptions and reduced operation hours. Despite these challenges, the company has continued to grow its store count across the region, innovated around delivery, and offered value to customers, and in turn spurring its earnings. Simbisa Brands Limited is this year's first runner-up based on its earnings, performance, and extraordinary recovery. This year's overall winner has remained a market leader, not only for its industry, but for the Zimbabwe Stock Exchange as a whole. The scale of investment in its capacity, market share, recovery, and innovation is unmatched. The company has weathered the storm to report its best volume performance in history, achieving the highest revenue for any listed company under a very volatile microenvironment. The overall winner is Delta Corporation Limited. Congratulations, Makoro Koto Amhlope, to each and every winner. We are celebrating with you and we say continue to do the great work that you are doing. As we're moving on with our program, allow me to introduce Editor-in-Chief, Zimbabwe Independent, Faith Zaba, as she gives us the vote of thanks.
Ladies and gentlemen, it gives me great pleasure to make this vote of thanks following a night of insightful presentations and awards for the 2022 Quoted Companies Survey being held under the theme Navigating Global Dynamics. This is one of the most anticipated events on the corporate calendar. I'm delighted that this event comes only a month after we launched the inaugural Zimbabwe Annual Investor Forum. In a few weeks' time, we'll be hosting this year's Banks and Banking Survey, another important event that seeks to gauge the health or lack of it of the banking sector. This is the trajectory that the Zimbabwe Independent, the country's biggest business weekly, will be taking as we accelerate our resolve to play a big part in national development. We will not be modest to say we want to play a small part. We are aware that the responsibility that we have in shaping national and global opinion on the investment climate is big, and we are ready to demonstrate that we are up to the task. Wealth creation has been a part of our DNA since the paper's inception just over 25 years ago. Listed companies give a window into the general stage of affairs in any economy, and by holding these events, we hope to give decision makers, investors, and other stakeholders a glimpse into the country's economic dynamics. Despite the headwinds stemming out of the COVID-19 pandemic and disruptions to operations that have been brought by such factors and instabilities in Eastern Europe, the future appears to be bright. But we need to work together to achieve our goal as a nation. Zimbabwe must return back to the growth path. As the Zimbabwe Independent, we are proud to be playing our role in the development of the country's economy. Let me take this opportunity to congratulate all winners announced tonight. To all the listed companies, we salute you and also celebrate you. I urge you to continue innovating and increasing your efforts to rebuild the economy. A special thanks to our partners, Nedbank Zimbabwe Board and Management, for making our dream come true. I recognize the role played by the Zimbabwe Stock Exchange Chief Executive Officer. We hope that in a few years' time, we will launch a similar product focusing on the Victoria Falls Stock Exchange, as it grows. I would like to thank the Alpha Media Holdings Board and management, represented here by Mr. Mafokidze. Last but not least, a special thanks to our Master of Ceremonies, Rudo Nyamoto. Ladies and gentlemen, we hope to meet again soon at more interfaces that we are creating. I would also wish to thank our valuable readers and advertisers for continuing to support us. We'll be launching new and exciting products on our digital platforms. We'll also be launching a new Zimbabwe independent website in a few weeks, providing premier products tailor-made for business leaders, policymakers, investors, and boards of directors. Please read our publication online through our advanced app, so do download our app on www.digital.alphamedia.co.zw. Have a good night.
Thank you so much, Faith Zabade, for the vote of thanks. Ladies and gentlemen, sadly, we have come to the end of our program. My name is Rudo Nyamoto. I've been your host tonight, your Director of Ceremonies, and it has been an absolute pleasure to serve you. As we end our session, we have a Feli Nandi to entertain us. Thank you and blessed night to you all.
Hey.
Ukamubata vandoba kanete Chapa itoro mushe Umukande panze Kunganitsana kudoro